You are about to finance your car at the dealership? Hold up. Before you sign your life away, let's talk about the secret they don't want you to know. I'm about to save you from potentially one of the biggest traps in the car buying experience. Yes, you heard me right. Dealership loans can be a trap. Why? Because what seems easy and straightforward could end up with you being overcharged and locked into high rates and obscene monthly payments. So buckle up. We're about to dive into 5 reasons why dealership financing could end up costing you more than you bargained for. And believe me, from my own personal experience, you're gonna wanna hear this before you sign on the dotted line. Jerry's got your back. Let's get into it. All right, let's dive into this mess. First thing, when you're not pre-approved for a loan from somewhere else, you're playing the game on the dealership's turf. And they got home court advantage, which means you could end up paying more than you need. You see, when you want to negotiate the price of a car, new or used, you definitely need to have some ammo in your pocket. And not having pre-approved status or financing means not having that bargaining chip. So you're gonna wanna walk into a dealership with a loan approval in your hand. Sounds like a confidence booster, right? That's because it is. Pre-approval from a bank or credit union saves you the hassle of dealership paperwork, and it puts you in the driver's seats for negotiations. Now, let's talk about interest rates. Dealerships can and often do mark up your interest rate to make a little extra cash on your loan. And there are a couple ways the dealer can finance for you. They can either loan you the money directly, or they work with other banks on your behalf to get an outside loan. And since the dealer is acting as the middleman, they got to get their cut. And this commission is referred to as finance reserve or dealer reserve, and it could substantially increase your monthly payments. Now, if the dealer is negotiating with multiple lenders, it will naturally find some loan packages that are more attractive than others. Why? Because it's going to be more attractive for them. And if a dealer only presents you with the loans that they provide the highest compensation, you may not get the best deal for your wallet. So you're better off doing the research yourself. Now, banks and credit unions often offer lower interest rates to their customers. In fact, you will typically get the best deal from a credit union. And from my experience, I have San Diego Credit Union. From my first car to a family car, the best interest rates you can imagine. So shout out to San Diego Credit Union. And the reason why this is they're member owned and they focus on maximizing cost savings for account holders. Plus, dealerships often offer longer terms, sometimes up to 96 months, to keep your monthly payment low. That's what they want you to think, but it actually means you may pay more, up to thousands more in interest over time. You ever felt the pressure to make a decision on the spot at the dealership? Yeah, that's their specialty. While the dealer may be helping you buy the car of your dreams, the two of you actually have competing interests. You're going to want to pay less, and the dealership wants you to pay more. And sales reps will pressure you to make a decision right on the spot. But financing on your terms means you can take your time, compare the options, and avoid that feeling that we all hate, buyer's remorse. Look, sometimes I need a full night to sleep on this because it's one of the biggest decisions of my life. And finally, did you know that sticking with your bank or credit union for financing can unlock a ton of potentials and benefits? Yeah, your bank and credit union might sweeten the deal with lower rates, eliminating checking account fees, or giving you rewards that the dealership can't or just won't match. So there you have it. 5 reasons to give dealership financing a red flag, a hard pass. It's not just about getting a car immediately. It's about making sure you're getting a deal that doesn't drive your finances crazy and into the ground. Okay, so what about those who've already taken the dealership financing route? Maybe you're watching this now and saying, great, now they tell me. Don't worry. It's not all doom and gloom. If you find yourself in this boat, I have some great news. It's called refinancing. And with Price Protect in the Jerry app, refinancing your car loan isn't just a possibility, it's a breeze. Can you imagine a better monthly payment, potentially more favorable interest rate? And the best part, Jerry does all the heavy lifting for you. No endless paperwork, confusing terms, no commitment until you're ready. Okay, so yes, now you want to know how it works. Here's how it works. Refinancing with Jerry means replacing your existing car loan with a new one. The new loan pays off your old one, and voila, you can be looking at lower payments or better interest rates moving forward. Yes, you could hit the reset button on your own terms. What's great is checking your rate and viewing offers has zero impact on your credit. Now, if you decide to go ahead, the lender might do a hard inquiry, but any minor dip on your score is often temporarily and less significant than you fear, especially if you got solid credit history. So if you're sitting there thinking about how you can break free from the clutches of high payments or rates, consider refinancing with Jerry. It's smart, it's simple, and it could save you a lot on your auto loan over time.
Jerry, the All Car app that's got your back. Because we car.